Welcome to a video on 2023 at Bravisa Templetree. The year 2023 became one of the memorable years for equity and mutual fund investors in India. In this memorable year, how was the journey of our clients and investors on their investments? What were our hits and misses? Where did we invest to generate returns for our clients? What were the mistakes we had, the learnings from those mistakes that we take it forward for 2024. Happy New Year and wishing you a beautiful 2024 in the financial markets. So, how was 2023? The broad markets, Sensex or Nifty, what generally gets spoken in the market, made a return of 20%. While the broad market, the whole market together, made 25% returns. Immediately there will be a thought ringing in the mind, what is this? 20 and 25. Where is this 25 coming? Right? Yeah. The higher return, that 5% extra return came from the universe of companies that gave higher return than the companies which were there in the Sensex and Nifty. Of course, Sensex and Nifty has the biggest names in them, but outside that universe is what generated big returns in 2023. That was in the mid and small cap space. Mid caps generated 43% and small caps went on to give 48% returns in 2023. So this is where we had a lot of deviation between what general markets generally people talk about returns and what actually happened in the market. So a typical investor should have had his or her returns between the range of 20 to 48%. Maximum is 48 and minimum is 20%. For those who had a conservative approach, having more of bigger companies in their portfolio, they would have had somewhere close to 20% returns. It can be even lower if their portfolio had more of private banks and technology stocks, because these two segments didn't do well in 2023. While for those who had more exposure to small and mid caps, their returns would have been higher than 20% and closely inching towards 48%. Of course, reaching 48% wouldn't have been a possibility because there are no funds which have 100% small cap stocks alone apart from an index. So, a range of returns for investors in 2023 was between 20% to 48%. It can be slightly lower than 20% also if the portfolios had more conservative stocks. The moment we see big returns possible in some place in the market, immediately our mind thinks that we should have that return. This is because it is psychology. Everybody wants to have the best, right? While the journey when we go for big returns is very, very tough. It's challenging because of various concerns. One is it comes with a very big up and down movement when it looks for big returns. In this table, we can see the journey of small cap, which has given the biggest return in the last 7 years. It has managed to give close to 50% returns in 3 calendar years, while we can see 2 years of negative returns, consecutive 2 years of negative returns, and in that 1 year it has lost 26%. Seeing 26% drop in our portfolio will, for anybody who sees that, if we are not mentally prepared, will immediately trigger, I am losing something big. And in this table, you can see the peak to through drops for all the segments, where Nifty has dropped only 37%, that is the highest in the last 7 years, and small cap we have 62% drop, which is almost close to double than what Nifty had. This means if your portfolio you have seen 10 lakhs and if it is going through a 62% drop, you will see it at 3.8 lakhs. 6.2 lakhs is eroded because of the drop. When somebody sees this kind of a portfolio return, they see their account dropping that much, immediately they will want to book and exit. This is the only reason why investors don't make money in the market. They come to the market totally unprepared on what they want, and whatever comes from it, they are not satisfied. When something happens without their, that is not in their expectation, that is a drop which they are not at all prepared, immediately they start panicking and exit, finally making a notional loss a permanent loss. And their experience is what they keep talking to people, saying that market is gambling, you cannot make money in the market. So in the market you have to stay with patience, run through the journey, understand what is required, what I require, and for my requirement what will be the kind of pressure I will go through in my portfolio. Am I okay with that? If we are mentally prepared for it, then we can go through the journey. So most of the time when we look for big returns, we just forego this preparation that it will drop also big time, and when that happens, generally people lose. So now in the last 2 to 3 years we have only seen markets going up and never it's gone down because of huge supply of money in the market. Every small dip is getting bought and it's only going up. So most of the new entrants wouldn't have seen the downside at all. When that happens, then they get into panic mode and exit. This is the reason why no mutual fund will have 100% money into one segment. A large cap also will have some small and mid cap. A small cap will have some large and mid cap also in its portfolio. That is taken to adjust the volatility and give a smoother experience for the investor. Only the index will have full exposure to like mid or large or small, and the volatility will be entirely different. So this is where we see a different return generated by mutual fund schemes compared to what the market has. If a small cap fund has like say 30 to 35% of mid and large cap, then obviously it will not match the small cap return. Small cap index would have given 48%. But this fund, because they are having 30% of lower return assets in their portfolio, it will probably come to 33, 34 or 35%. And by seeing this kind of numbers, people immediately think that my fund is not doing well, I want to get out and put my money into something else. So that actually triggers various losses again, because when we see something big, take money from one more place where it is not doing well and taking it, putting it here, next this will go through a down cycle, from there we lose, take it and put it to something else. Like that, if we keep on churning, net we will be a loser. So mutual funds, this structure of having combined exposure gives a diversification and also a cushion for not having a hard landing. That hard landing, soft landing is being talked about in the last 2 to 3 years based on recession. The same thing can be used here also. So what was 2023 for BTTR, Bravisa Templetree clients? In a wonderful year, the journey of our clients helped them to generate between 32 to 33.5% returns. We were not at 48, not at 20. This was possible because of our scheme selection and allocations in the market. So how was this possible? One is the interactions which we have with the fund managers and fund houses. So we study the fund houses' processes. What kind of process they follow, what is the strategy they are using, are they following the same strategy, so that every strategy or every process will go through its up and down cycle. Like how we have sun and moon in a day, all the strategies and processes will go through same up and down movement. Like how even our mood swings, we are not happy 24 hours a day, right? Same like that, even all these strategies go through. So if a fund house has a strategy, and if we are following the same strategy immaterial of whatever is happening in the market, then we know this is a place where this fund will do well and this particular fund will not do well because their structure doesn't align with the current market. But that doesn't mean we can fully shift. Like say we are having 50% money into one scheme which is going to do well, and when that fund structure go through a down cycle, immediately take money from here and put it into the next. That's not possible, because that will create lot of taxation and more transaction. What we can do is a small portion we can do here, so that way we can have higher exposure to which segment is doing well. This is what we do. And along with that, we have our own research which helped us to identify the sectors, industries which are doing well in the market, and what are the stocks that are having big earnings growth, companies which are making big profit. We took all these funds which were likely to do well in the market in 2023. In 2023, we had value stocks doing well. We had sectors like manufacturing, industrials, automobiles, real estate towards the end of 2023, commodities, energy, power, and public sector enterprises. While if you take the broad market, all these sectors put together will form less than 50%. So all these small sectors managed to take the index to a new high. So you can see what is the kind of strength these sectors would have had. For example, power sector had 66% returns in the last year. Construction, that is the businesses around real estate, companies which do construction, which do tiles, cements, companies who finance the construction business, all these put together has made around 45-50% returns. So immediately you will think, okay, if my money is fully into power, I would have made 60%. That's impossible, because the universe of stocks also has become very big in the country now. Even if you take real estate, most of the Bangalore stocks are doing well. That itself around 7-8 companies are there, which will continue to run, which will go down, we might not know. So it's having good to have a bunch. So that's how mature our country's market has become. So by having all these together, we took schemes that were best in large, mid and small, had made a portfolio of it, and that helped our clients to make big returns. Activities of 2023. Along with the scheme selection, we had the opportunity to do 4 profit booking activities in 2023, whereby we moved money from segments where we had more profits to places where there was potential to have higher gains. This also helped us to generate additional returns for our clients. The first activity we did in February 2023, at the time market was going through a downside. We sold and bought back in few days time. This was late January, early February in 2023 we did this. We sold and bought back at 5% lower price, thereby giving our clients a slightly additional return after paying taxes. That was the beauty with this activity which we did. When we sold, for the profits, we took out the profit portion, tax portion on that, and the balance money we bought it at lower NAV, thereby getting a slightly more number of units also, and a portion of the profit is already booked profit, paid tax from the investment itself. From the hand we are not paying tax. So that way our goal was to make the whole investment returns tax free in spite of paying taxes. If we can sell and buy back at lower level, that lesser buying price will help us to pay the taxes, and total return can be made tax free. We were very successful in this activity in February 2023. It happened in just 10 to 12 days time. Then after that, second activity we did the same, selling and buying back in May, where we failed abruptly. So this again gave us a learning that market is getting very, very strong. After February drop, March was the bottom and market takes off from there. Generally when it takes off from a deep correction, it will do one more drop. That's what we were expecting, and we sold, but it recouped. Then we had to buy back at whatever price we sold. But it gave us a learning that market is strong and it is getting deviated, going to give a different kind of a situation in the coming months. After 5 months, in October, between large and mid cap, gap got big, very wide. That's where we started realizing, okay, this is time to take some profits out, because at the peak from there to the mean, the gap was very big. If there is going to be a correction, huge give up will be there. Why not take out some profits? So in October we did this profit booking, moving money from mid and small cap to large cap. This again was a wonderful activity for us. You can see in this table last 3 month returns for large, mid and small. compared to 1 year and 3 months, what is the percentage of gains of the 1 year return is being contributed in this last 3 months. See the traction of large cap and the speed at which small caps traveled. Though small cap is showing around 34%, out of the total gains, 34% has come from the last 3 months. In large cap, out of the 1 year gains, more than 60, I think 67, 69% of return has come in the last 3 months itself. So this October activity became very, very successful for us. Of course, very few people participated in it, but immediately in December, we got one more profit booking opportunity where charts started showing weakness for small and mid cap. It also got triggered. There we sold again, and as I am talking in the second week of January, every day we are having large caps doing extremely well compared to mid and small caps. So for our clients, around 20% of their holdings in mid and small cap have already been moved to large cap. So now we are having more weightage to large cap, lesser in mid and small cap. This has been helping, like these activities have been helping us to generate additional returns also. So that is why, in spite of we having conservative exposures to large, mid and small, still we were able to manage have a 30+% return in 2023. So with all this, so with for profit booking and positioning our portfolios to large cap, what is 2024 going to look at? So past, we will not be worried much. Future, we are more concerned, right? So 2024 is going to be a more promising year, more events, and one beauty was or is it is so lucrative. As we are talking today, there are two wars going on in the world. Ukraine war, it's almost 2 years now. February 1st, second week, third week comes, and the Israel war, which is actually escalating every other day. Just 2 days back, I think yesterday, UK and US had a fight with Yemen, and war is escalating. Ships are getting bombed, cargo ships are getting bombed in Red Sea. Ships are taking a long route through the Cape of Good Hope. Cost of transit alone is increasing threefold. All the exports of many countries are escalating in price, while in India, we are living a life as though nothing is happening around us. The reason for this is the relationship that India has with all these countries. Israel, Iran, Russia, Saudi Arabia, UAE, everywhere we are friends. As I am talking, just about few hours back, I read that Jaishankar is going to Iran on Monday to have some peace talks. So this has made India as the next Switzerland. That's what has been talked about in the last 2 weeks. So whichever country has a very stable government, though that country which is neutral generally attracts more investments. So with the third term for BJP almost factored in the market value, what will happen we don't know, but market is fully factored in. When a government comes for third term, that is 15 years of ruling, the whole world puts more money into this market because they believe that there can be more developments happening. And as what they are thinking, that's what is happening here now. The kind of infrastructure development that's been happening in India. Just yesterday, we had this Atal Setu getting inaugurated, built at 17,500 crores cost. It is going to reduce more than 1 hour of travel time between Mumbai and Navi Mumbai. So that much time is going to get saved for people, and they can become more productivity, right? Like this, lot of projects, huge power projects going on. I myself know when 20 years back, in Bangalore, we used to have 4 hours of power shutdown, morning 2 hours and evening 2 hours. Today, we don't see power shutdown at all. I don't think, not only in Bangalore, it's going to be all over the country, because government has brought in a lot of power projects which were defunct has also now got revived because of the NCL. Too many advantages have happened. Corporate balance sheet has become very, very beautiful now. No debts. banks are willing to lend, but companies are not taking money because they have made so much profits. They are investing on their own. I have talked about in one of the videos, Britannia had 5 new factories set up in 2023. All the factories together, I think they spent around 725 crores, fully internal funding. Similarly, Tata Steel, JSW Steel investing into new facilities, own funding. So much profits these companies have made, so they're not going for bank funding. Our banks, corporate banks, the PSU banks are corporate banks for India. All the balance sheets have been very clean, taken out of all the NPS. Now they are generating huge profits. That is the reason these stocks have been going up. For almost a decade, all these public sector were not doing well. Now, though in the market, analysts, market participants, media are all talking about high valuations, actually the kind of momentum these stocks are having, it has more space to cover. Public sector enterprises, value stocks, though there is stocks that value stocks have extended, but more profits are coming only in those segments. So wherever profit is there, only those stocks will run up. So though so much have been talked about finance and technology, at least for me, I am not seeing that finance is still started going up. That is the private banks, which is forming the biggest chunk of the finance space. Whereas real estate, construction activity, commodities, energy, all these sectors are likely to do well. There is going to be opportunities to run up also. And that said, it is not going to be a bed of roses for India. If this government comes for the third term, we are expecting harsh regulatory changes. That is going to hit the market big time. One of the changes that's been talked about is the labor law, which is going to impact heavily when, though in the long run it is going to be very, very beneficial for the country. Immediately when it comes, there will be a lot of media exposure which is going to be negative. It will react to the market. So this kind of big volatility will be there. Anytime when there is big return, big volatility will be there. I already talked about the small cap returns and the volatility. That is what we are going to see now. So why large cap and how that will do well? When the government in the country is stable, all the foreign money will be coming into that country, and when foreign money comes in, they are very smart. They will come in at an opportunity and get out when the opportunity gets over. So for them, for doing that short entry and exit, they need liquid stocks. They will not come into small and mid cap. They are going to participate more into the large cap space. Today, our election is going to be a very big activity. All the politicians are going to spend a lot into the market. So you might ask, what is that which is going to happen in the market when they spend? For them to spend money for the election, they need to generate money, right? So their money, they are pulling it into the market through various channels. They will also be buying liquid stocks only because they have to sell it very fast. Probably by April, they have to sell and take out money to spend for the elections. Maybe that time when they are all taking out money, market can go down. That will be an opportunity. Today, as I am doing this video, I had 3 client calls from morning. All of them I told was, how is 2024? They asked me. I told, borrow as much as you can and put it into the market. This is a great opportunity we have. Of course, it is going to be very, very volatile. To be watchful. At right time we have to exit. Similarly, right time to enter. Because as of now, we are at a very high price now, expecting to have a correction. When that correction happens, I will for sure come out with a video and inform which are the segments where we can buy some funds for immediate gains. That will be like 3-4 months we can make very good profits. Short term gains, big ones, even if we pay taxes, it will be helpful for us to generate big returns. When such opportunities comes, I will come and tell you all. In fact, apart from video, because last 2 profit booking when we did, most of the clients told us that we don't see the videos, you should inform us. I thought like, okay, after putting the video, I'll also send a message to inform that there is an opportunity. If you want, you can participate, because the next 6-7 years are, I would say, triple or 5 times golden era for our country. Take advantage of it to grow your wealth. India looks like, as all are talking, it's going to be the next Switzerland. Like I was thinking, what if it becomes a real Switzerland and the whole world starts coming to India to take and stay in India? How would it be? Just think for it. Think about it. You will rejoice. Happy investing. Thank you.